Is Google the perfect stock? The Motley Fool has spent decades uncovering game-changing investments, and today we're putting their legendary stock-picking criteria to the test. Does Google check all the boxes for the ultimate investment, or are there red flags investors need to know? Stick around as we break it all down. This could change the way you see Google stock forever. If you love smart investing insights, be sure to subscribe and stay ahead of the market. We want to remind you that this video is for educational purposes only and is not financial advice. Always do your own research before investing. The Motley Fool has been a trusted name in investing for decades. Brothers David and Tom Gardner founded the company in 1993. They aimed to make investing accessible and understandable for everyday people. The Motley Fool is known for its engaging and informative content. They provide stock recommendations, market analysis, and educational resources. Millions of investors rely on the Motley Fool's insights. The Motley Fool emphasizes long-term investing. They encourage investors to look for companies with strong fundamentals. They believe in holding those investments for extended periods. This philosophy has helped countless individuals build wealth over time. The Motley Fool's approach to investing is both insightful and accessible. The Motley Fool has a team of experienced analysts. These experts conduct in-depth research on a wide range of companies. They use their findings to identify promising investment opportunities. The Motley Fool's analysts are known for their rigorous approach. They are committed to providing investors with accurate and unbiased information. The Motley Fool's definition of the perfect stock goes beyond just looking at stock prices. They believe that a perfect stock represents a company with a strong track record and a bright future. They use a combination of quantitative and qualitative factors to evaluate companies. This holistic approach helps them to identify businesses that are positioned for long-term success. One of the key criteria that the Motley Fool looks for is consistent revenue growth. Companies that can consistently grow their top line are typically well-managed and operate in attractive markets. In addition to revenue growth, the Motley Fool also considers profitability. They favor companies that generate strong profit margins and have a history of earnings growth. These factors indicate a company's ability to generate cash flow and create value for shareholders. The Motley Fool also recognizes the importance of financial health. They look for companies with strong balance sheets, low debt levels, and ample cash flow. These characteristics provide a buffer during economic downturns and allow companies to invest in growth opportunities. The Motley Fool's emphasis on financial health ensures that investors are considering the long-term sustainability of a business. Alphabet Inc., the parent company of Google, is a global technology behemoth. It dominates the search engine market and has a sprawling presence in various sectors. These include cloud computing, digital advertising, and artificial intelligence. Its innovative products and services have become ingrained in the daily lives of billions worldwide. Investors often view Alphabet as a potential candidate for the perfect stock. Let's analyze Alphabet based on the Motley Fool's criteria. Alphabet is headquartered in the United States, a stable and developed economy. This aligns with the Motley Fool's preference for companies operating in robust economic environments. Alphabet's current ratio is above 1.5. Indicating strong short-term liquidity. This signifies the company's ability to meet its short-term obligations comfortably. This aligns with the Motley Fool's focus on financial health. Alphabet's forward PE ratio is generally considered to be within a reasonable range, though it can fluctuate depending on market conditions. Alphabet has consistently delivered impressive sales growth over the past 5 years. This demonstrates the company's ability to expand its market share and capitalize on the growing digital economy. Alphabet's earnings per share have also grown steadily, reflecting its profitability and efficient operations. Alphabet boasts a high return on equity, highlighting its ability to generate substantial profits from shareholder investments. Alphabet also maintains a very low debt-to-equity ratio, indicating a conservative financial approach and low financial risk. Alphabet enjoys high gross margins, reflecting its premium pricing power and efficient cost management. The company's net profit margin consistently exceeds 15%. Showcasing its exceptional profitability. Alphabet's EPS growth projections for the current year remain positive, signaling continued financial strength. Alphabet meets all of the Motley Fool's criteria for the perfect stock. It possesses numerous strengths, including a dominant market position, strong financials, and a history of innovation. However, no stock is without risks. Alphabet faces challenges such as increasing competition, regulatory scrutiny, and the potential for economic slowdowns. Investors should carefully consider these factors alongside Alphabet's strengths before making investment decisions. Ultimately, whether Alphabet is the perfect stock for an individual investor depends on their specific investment goals, risk tolerance, and overall portfolio composition. If you enjoyed this video, we bet that you will also enjoy the 2 videos now appearing on the screen. Go ahead and click on one of them now to continue your exciting and prosperous investment journey. Thanks for watching. We'll see you in the next video.